Good morning. Welcome back to the Retirement Report. I'm Hank Parrott, your host. With me, my good friend and special guest, Dr. Friday with Dr. Friday's Tax and Financial Services over in Brentwood, Tennessee.
That's me.
She is a tax expert for individuals and small business owners. And you know, one of the things, Friday, you're also an enrolled agent, so
right.
You know that gives you the ability to represent people in front of the IRS.
So if they're get the love letters in the mail and they basically say, oh my gosh, I'm not too sure what I'm supposed to do, or I'll throw it in the drawer because if I forget about the IRS will forget about me, and the next thing you know, you've got a lien or a levy, or you're trying to refinance your house, or maybe you're just tired of being behind with the IRS, you've stopped filing taxes and all that. That's what we come in and we can do the negotiating. We can get you either an offer and compromise or a payment plan, or get you caught up and stop kind of running from it and face it and deal with it. There
you go. So among other things, you know, when it comes to, we talk again about tax preparation, tax planning, and this is one of those, you know, when it comes to retirement planning, you know, one of the things I run into with new clients coming in is where, I mean, usually my clients, of course, these are people that have saved well, right? You're out there, you know yourself. You saved well, you're prepared for retirement, or at least you're thinking you're prepared, and we help you with that, you know, making sure, in fact, that you're able to accomplish all your financial goals. But sometimes, guess what? Maybe the kids get in trouble. Or maybe, you know, the parents get in trouble. I had a client I remember some time ago, it's probably been the last couple of years, I think it was, and their parent got into trouble. They were, you know, run up, and this is it's happened more than once, where they got into trouble where they ran up credit cards and got themselves in financial problem, and they were like, how do we fix this, you know, and help them. One of the areas that comes into play, and this can be, you know, with that typically comes in tax problems, right? Because then they've run those things up, and there's all these scams out there where they're taken advantage of, and maybe they're, you know, giving to some charity or thinking they're going to win a bunch of money, and they're giving money. There's all these different things going on, and unfortunately this happens all too often. Elder abuse is still alive and well in our country, and we've got to get, you know, this is one of those areas that I know for, you know, for myself in our office, we're always very sensitive to that in terms of watching our clients as they get to advanced ages and making sure that they're not undue influence or things going on there that create problems. When it comes to getting into, you know, if your parents get into tax trouble though, or your kids get into tax trouble, having someone like Dr. Friday that can help with getting that taken care of, you know, help represent, because they don't want to represent themselves in front of the IRS. That's a bad idea. What you want to do there is you want to have someone, an advocate for you, who knows the rules, knows how it works, keeps it on a business-like platform, and can just get you out of that problem as quickly and easily as possible with the least amount of money. You know, one of the things when it comes to taxes, so I don't have to deal with that part too much. Usually it's in that context where, you know, client comes in and they're saying, hey, you know, my dad did this, or my mom did that, or, you know, my kids are all of a sudden in trouble here, and, you know, what, you know, is there anything I can do to help them? Well, this is one of those ways. When it comes to going back to the tax planning piece and understanding, you know, again, on investing in taxes, when it comes to how you can minimize what we're talking about with regard to your retirement accounts when you're taking money out in retirement, how you can minimize those taxes, and how you can be thinking more about not just this year, but of the, you know, the rest of your life kind of thing, right? How can I minimize taxes over my lifetime? That's huge. As I said, it could be worth hundreds of thousands of dollars to you having the right strategies in terms of reduced taxes. There's so many different things you have to deal with in retirement. Taxes being one, of course. Healthcare costs just went up again. We were at $250,000 over your retired lifetime. Now it's up to $280,000.
Oh, wow. That's a big jump.
A big jump, right? Over 10% again. So this is one of those areas that we're always looking at ways that you can keep more money in your pocket, and a lot of it has to do with planning. So now, you know, this is one of the nice things with Friday is that she's not just doing tax prep a few months out of the year and that's it. She's doing tax planning all the time with the clients, and this is where we work closely together in terms of working out plans for clients when it comes to making decisions, whether it's capital gains types issues, whether it's, as I mentioned, Roth conversions. I'll call her up and we'll go over, here's their last year's tax return, here's what we're thinking of doing for a tax strategy, run that for us, and she'll run the tax return in advance to make sure we're not going to trigger any hidden taxes. And this is one of those AMT tax comes to mind.
Absolutely, yeah. More than once we've actually had to run the numbers and figure it out, especially when someone's selling something, alternative minimum tax, even conversions, can sometimes. Remember, alternative minimum tax kicks in at $45,000, so it's not very high to actually, but it doesn't trigger every single time. So it's a matter of sometimes how the money's coming in and what's going to trigger it, and it's kind of a hidden tax. So it's very important to run the numbers first so that we both can say, hey, this is, because Hank kind of knows his numbers and he crunches them, and then we get the little surprise in there every once in a while that I get to shock him and say, nope, this is what's going. He's like, oh man.
Because I can look at the tax, I can look at the tax brackets. I can look and see, here's how it's supposed to work. I can say, well, here's my standard deduction, here's the 10%, here's the 12%. I can run all those numbers, but guess what? There's a thing called this alternative minimum tax. We refer to this AMT as the acronym, alternative minimum tax.
Right.
And this is like this shadowy little hidden tax code embedded in our tax code that we can't see when we run those numbers. That's where the software comes in, and running a tax return might trigger this tax.
And you also have that investment tax of 0.09%, and you've got the Medicare for people making over $250,000 of 3.8%. So there's all these little extra ones that come in, and if they have health insurance or don't have, which most in his case most are on retirement, so they have the health insurance, but the penalty can come up. But alternative minimum tax is basically a tax code within the tax code. It's supposed to level the playing field according to the IRS for the wealthy to the people that are not so wealthy. I don't necessarily agree with the theory, but they didn't ask me when they put it in.
There we go. Well, I mean, AMT, leveling the playing field is their term, as you said, because the reality is, what it means is that you didn't pay enough tax according to the IRS, right? You didn't pay enough tax, and I say the IRS, and of course our Congress passed those laws, and that's the enforcement part of the IRS. But you didn't pay enough tax in their mind, therefore we're going to cause you to pay more tax. We're going to make sure you don't get over too much here in terms of paying too little in tax. We're going to have this other little tax come in.
Exactly.
So here's the part that comes into play when it comes to tax strategy. Then we do it in advance. We don't do the put a tax strategy into play. We don't do the take these actions and then find out after, oops, this happened. No, that's why we pre-run a tax return. So I'll come up with a strategy, I'll run it through the normal procedures as far as the tax brackets and that go, calculate out what we anticipate the tax to be, then I could say, call Friday, hey, can you run this for me, so we can see in fact that we're not going to be triggering any hidden taxes that are going to surprise us and set up problems. This team approach benefits you. Same thing with having an estate planning attorney on the team as well. Is that gives you another facet there that gets into things like, you don't have to worry too much about estate and inheritance taxes anymore. But guess what? There are capital gains taxes and still income taxes that can come into play.
The Hall tax.
Putting everybody, Hall's income tax is another. In fact, we'll save that one for this next time. Join us here. We're going to take a quick break. When we come back, maybe a little bit about the Hall's income tax. So join us here. We'll be right back on the Retirement Report.
Owners.